3 things every executor must do before calling the mortgage company. Let's talk about that. You just received your letters. You're officially an executor. You pick up the phone to call the mortgage company and they say, "I'm sorry, we can't talk to you because of privacy laws." Don't believe it. Today, I'm going to show you the Federal Successor in interest rules that forces the bank to play ball and the 3 things you must do to protect the house before the bank tries to take it. Most people don't know this, but there is a powerful federal law called RESPA. Under the Successor in interest rules passed by the CFPB, once you provide the bank with a death certificate and your court-issued letters, the bank is legally required to confirm you as a successor. Once you are confirmed, the law forces the bank to treat you exactly like you're the original borrower. They must give you payoff, the interest rate, and the breakdown if any past due payment amounts exist. And if they hide behind the word privacy after you've sent the letters, then they're violating the federal law. But before you send an email to the bank's successor department, you have to do these 3 things first. Secure your legal standing. The letters. The bank will not talk to you just because you're the daughter or the son or even the spouse. To their computer system, you are a stranger until you have court-issued documents. You must have your letters of testamentary if there's a will, or your letters of administration if there isn't. Don't just call and say, "I'm the executor." Tell them, "I am confirmed successor in the interest under the 2016 mortgage servicing rules. I am emailing my court-issued letters to your successor department now." Using their own legal terminology changes the power of the dynamic immediately. They realize they aren't dealing with an amateur and that they're dealing with a professional. Perform a mailbox audit, the statement search. So before you call, you need to know exactly what kind of loan you're dealing with. You need to find the most recent mortgage statement, find the loan balance, the account numbers, but most importantly, you need to find out the type of loan. Is it a conventional loan, an FHA loan, or a reverse mortgage? Look for any forced placement insurance notices in the mail. If the bank thinks the house is vacant and uninsured, they will add a massive expensive insurance premium to the loan balance. You need to know if this has already happened so you can dispute it once you secure your own vacant home policy with your insurance provider. The physical lockdown, asset preservation. The bank's biggest fear is what we call a zombie house. It's a vacant property that is rotting, leaking, or being stripped by vandals. If their drive-by inspectors see a pile of newspapers or overgrown grass, they may move faster towards foreclosure, and they'll want to protect that asset. So you need to change the locks, forward the mail, and keep the utilities on. Take a dated photo in front of the house the day you take it over. And when you finally call the bank, you can tell them, "This property is secured, the lawn is being maintained, and I have a visual log of the property's conditions." This tells the bank that you are a high-value executor and they don't need to panic foreclosure. The loss mitigation power play. If the mortgage is already behind, there's a secret. You can actually stop the foreclosure train. If you submit a complete loss mitigation application, basically asking for a loan modification or a short sale, the bank is forbidden from moving forward with the foreclosure until they have made a decision on your application. Even in a non-judicial state like Georgia, where they can foreclose without taking you in front of a court of law, a savvy executor can use this to hit the pause button on the bank's clock while you're getting the house show ready for sale. Worst comes to worst, if you're having difficulties with the bank, you can always get a good probate attorney to file a temporary restraining order that can temporarily stop the foreclosure. This can buy you some time to either get the house sold or get the payments caught up. Not always, but the bank may act difficult at times. Between the successor and interest rules and a solid marketing plan to get the house sold, you have the power to save family equity that can be passed down to the loved ones. If you are in the beginning stages of the probate process, download my ebook, The 7 Biggest Probate Mistakes Below. And if you want to see how our real estate team handled a reverse mortgage, which had its own short little timeline, then watch this next video. Take a breath. You have more options than you think, and I'll see you in the next video. Bye.